Hi, Warriors. Day before Thanksgiving. How you doing, Bran? James Groom, welcome to Face. How you doing, Kman and Sinatra? Hello, Laura, Ryan, Ingmar. So, team Yen recovered yesterday. Who wants to take it, Ryan or? Oh,
I don't want it. Do you want it?
yeah. What do
Who
you
wants
think?
it?
Who wants to talk about this recovery and who thinks that we could, maybe get up back towards 150?
It's
Yeah.
possible. It might have petered out a bit. I don't know. There's a bit of there's all sorts going on with this one. We've had the Japanese government lowering its assessment of the economy and stuff. That's done a bit of damage. Probably a bit of a. It's shown that the move down perhaps was a lot bit of profit taking, some flows. As I said this morning on the flow show, it's not that move now looks like it's not a structural change in the fundamentals or anything like that. Otherwise, those rallies would have got hit pretty hard. But strong bounce, strong enough. Couldn't quite get to 150. That's my level that I'll be looking at. If we get up there,
Yeah.
what does it do there?
Yeah.
I was waiting to see if you guys took it up there, but not thus far.
Okay. Euro, we did have that little mini reversal from right around that 61.8 level. Not much follow through so far.
Yeah, it was. Everyone in the room's been saying it just looked a little bit exhausted up there yesterday,
Right.
and
Yeah.
yeah, it's had a little dip. It went through the levels 109.40, 109.0010. Now it's trying to get back up again. So yeah, I think below 108.30 ish and the 108 big figure, that's where this thing might start really turning around and back south. But yeah, holding above sort of 108.70.30 keeps this rally alive.
And I think the Aussie has hit a couple of resistance levels up here between here and 66. Views on Aussie.
Kay, you want to take that one? You've got.
Yeah,
Hi,
Kay.
Blake. Hi, everybody. Yeah, that's
Good morning, Kay.
the 65.85 around there. That's a bit of a level. And then on the underside, we had a bit of a retest of the 65. It didn't really reach 2025. It just stopped before around 30. So that's your range to watch to start your day, I guess. It does look better bit still, the Aussie. Also, if you look at a few crosses, Bullock is still a bit more hawkish than her predecessor ever was. So that's keeping the Aussie a bit supported. But for against the dollar, it's now in a range. But let's say it may start to carve or to build a little bit on that 65.25, and then see if we can get up into the 66s at some stage, perhaps. That's about where I stand with the Aussie right now. It should do okay on the process side.
Okay. Just my view is that I'd love to buy a pullback because I think we're going up towards 69 or 70. We haven't broken out yet of this channel.
I like that upper trend line there. That's going to be a pretty big level up in the high 66s if we ever get there.
Yeah.
If you guys don't mind
Yeah,
me adding,
yeah.
if you guys don't mind me adding to a little bit, and good morning. Copper hit the 200-day moving average yesterday. So did the Aussie. So copper is actually showing some weakness today. I'm not saying that that Aussie is going to necessarily do it today, but both of them are rallying right into resistance.
Okay, Bran, 102 is off the table. I've been talking about it being off the table since the CPI last week. I don't think so. I think 107.5 on a pullback, you buy it. That's it for the dollar in my opinion. If we could have some type of rally back to 105, 105.5, I'm a seller. That would be like 107.5 euro. But I think we're going to 112, and then this is going to be, I think, a long-term trend in the dollar. What happened last week I think, set it off. And yeah, Forex traders looking for 93 in 2024. Wow. Okay. So that's what makes a market. Can't stop the gold. Right here, what do you guys think about this? These precious metals?
Looking blowy. It's looking a bit blowy.
Yeah, you mean
It's
what's
not
that
coming
mean?
back from those prior highs.
Like they could blow off and just get through this triple top up here. That'll be a big signal over, what is it, 2060, 2070? You know, failed there 3 times.
I think if we go through the prior shorter term highs, you know, around 209, I think it'll be 2020, not long after.
Yeah,
I
2020.
actually folded my short this morning. I was trying a little short against those highs up here, but I don't like the look of it.
Yeah, same with silver. Could have a breakout there. I mean, here's the channel. You know, stopped it last week. So far containing it, but this looks pretty good too. So, you know, when the dollar is bad, you could be long everything almost.
Dale, real quick, crude just slapped into a new low, and it's trading below $75. There's a lot of headlines right now around this OPEC
Saudis.
meeting. Yeah, and I think there's a little miscommunication here. Kman, can you I know you were kind of following along with Mark in our chat room. Can you explain what happened? Because it looked like they have a meeting, then they don't have a meeting.
Exactly. So first of all, there was this a headline coming out saying that they scheduled talks may be delayed according to some delegates, and that slapped the oil the first time, and then RIA said, no, the OPEC meeting is to go ahead as planned. And now we're getting another headline saying that, again, it has been delayed. So it's really up and down. But as soon as it gets delayed, of course, since Saudi Arabia was supposed to prolong at least their cuts into 2024 or announce something of the likes, oil, if those talks are delayed, means that there is some discord and oil's getting slapped here. But
and this $75 level is a really big support. I think. I know we're trading slightly below it, but I think this is a really key support that that the market should be focused on. And you know, if we get some, you know, a nice little foothold below here, which I don't think is going to happen. But if we did, you know, then next thing you know, we're going to be trading back at 70. And Biden's going to get his fill of crude oil. Dale, what do you think about that?
If they give him a budget to buy it, right? I mean, I don't know if there aren't funds. I mean, we're just keeping the government open. So I don't know if there are funds for it.
There's always funds to buy crude oil. Always. They'll find it.
Really?
Yeah, they'll find it.
Well, I mean, that's why they didn't do it last time down here.
Because
they didn't have the money when there was one of the first of the third threats of a government shutdown. So
right.
I don't know how that thing works anymore. So but you know, I hope we do fill up our strategic petroleum reserve at lower prices, because it leaves the country very vulnerable in case there's any kind of energy shock from the Middle East, even though everyone's sanguine about it right now. Who knows what could happen next year?
Yeah.
You know.
Well, yeah, that's true. Good point.
All right, so grab that you know, funnel or hose from the tank and start filling it up, Joe. So Blake, what are you looking at going into the holiday here today?
Well, we have weekly unemployment claims, and that's going to be like the here. I'll nab this from you real quick. First of all, I want to say that we have a lot of ranges that are trying to you know, stick right now in the markets, and I think it's great because you can kind of trade around these ranges. As Ryan and Kman were talking about with you, the yen a little bit earlier, and about its recovery move overnight. all it's doing is it's coming right back up towards resistance. You can see like a lot of previous supports acting as current resistance, and I think it'll give you your good, kind of lines to deal with, as far as trading ranges go, especially today. I mean, today we've got weekly unemployment claims. The market's really focused on the continuing claims, because the continuing claims numbers continue to, I didn't mean to say continue twice, but they are showing continued weakness, if you will. So the weekly unemployment claims will matter today. And then we have inflation expectations from the University of Michigan, numbers that have been fast forwarded a couple of days, because that they want to have a 4-day weekend and not a 2-day weekend. So they're going to release their data on today. So we're going to get that data, and that's going to wrap us up for the week. But we're also getting durable goods orders. So that's going to be another thing. So I think the reason why I'm pointing this out is because if you're looking at the dollar yen specifically, any improvement in data is probably going to give the dollar yen a boost back above 149, which you can probably sell into. If you believe that US data is going to start to weaken moving forward, that's probably going to be a level to sell into, in my opinion. But you also have, and here's by the way, that $75 level with crude oil. You also have the euro, which is now starting to struggle at the 618 retracement. This is the big Fibonacci level we've been talking about. Yesterday put in a very, very bearish candle, which is dark cloud cover for those of you that don't follow that. And that makes me a little skeptical, actually, getting long, euros on dips. You can see we held support, which we figured was going to be support yesterday at 108.85. That was this is what we did with the team, here yesterday with the ForexAnalytix subscribers. That was, over about 24 hours ago. Today, the overnight low was, 82, and we've bounced from that, but you can see how significant that level is now. And that's going to be important going into this data that we have at the end of the week, because Euro bulls are going to be pretty bummed out if we trade and close below 109 today. If we trade back below 109 and we're trading, let's say, at 108.60, you're going to have some longs that might be questioning what they're doing long the euro up at these levels, especially with PMIs coming out tomorrow. Also, I guess what's happening right now, and I'm gonna ask Ryan and Kman here, because I know they've been paying attention to it. We've had this autumn statement come out with the UK, and from what I read briefly, and again, I'm just seeing these headlines come across as I'm trying to, wake up and catch my breath here and drink my, multiple cups of coffee. Looks like growth forecasts have been revised higher. Is that correct?
Yes. If you can count on what these lot say, they can't count the fingers on their hand, let alone give forecasts for whatever. But it's 0.6%, 0.7% growth expected. Woohoo! Let's all have a party over that.
By the way, Blake, we got the Nvidia earnings out of the way. At one point, at one point in the aftermarket, it was down about 20, but it's coming in higher here today.
Yeah, it was down like 2%. I was watching it down 2% initially, and then there was the calming comments about China, like, oh, China's business is going to slow down, but don't worry, we're going to make it up in other areas, and we see other areas of growth to pick up the slack in China. So I think that calmed the nerves of traders. So it'll be interesting how Nvidia trades here. I can't imagine it's going to get hit too hard. I know it's flat right now pre-market. I guess
up a little bit.
Yeah. It's I mean, you can see it right here. I guess I'd get a little nervous if we start trading much below like 490. Or maybe around 480. I guess that might
maybe
be
it could pull back to your moving averages there.
Yeah, it's a 4-hour chart, so maybe to the 50 DMA. Looks, I don't know. I wouldn't. I look at this as more as a range and in a bullish trend. So you want to pick it up closer to range lows if you can get an opportunity, like somewhere down here. But I can't chase in this environment. not where we're at right now. If you miss this move, there's no sense in, paying up for it. Not as a trader. If you, I had this talk with Chris Weston the other day, and this is off camera. This is not on camera, but I'm like, I can't chase this shit up here. There's no way. And I'm like, I manage my own money. I don't manage a book anymore. And when you manage a book, you have certain benchmarks you have to reach. And here we are going into the end of the year, and I've got my, last quarter coming up, and I'm looking to get paid or not. Yeah, I might have to chase some shit higher, but I wouldn't be doing it here, not as a trader. Like, it doesn't make any sense unless we got some strong momentum higher. Anyway, so I look at this and I'm like, good luck. You guys have fun if you're buying it up here. I mean, it may break out, but I think the risk reward's better found in other opportunities. So anyway, just my thoughts on that. Going back to the FX market, pre-market, we got the Canadian CPI yesterday. And as we were sitting here yesterday on the show discussing this triangle, we said, hey, if we dip down to 136.80s, it's probably a good level to be on the long side. We got as low as 80 something, and we bounced. Now, we got crude under pressure. This is the reason why I bring this up. We got crude under pressure. Do you think there's a risk that we get a little bit of a squeeze here in the dollar CAD going into this Thanksgiving holiday? What do you think, Ryan, with crude, trading well below $75 right now?
What's that, mate? Sorry.
So what is your name and your last name and your address? Just kidding.
No, sorry, I'm watching all these headlines dropping.
What headlines are you looking at? I'll come back.
Just this OPEC stuff. It's been the whole OPEC shebang has been delayed till November 30th. So,
that's nice. Well, that means that crude's got a few days to drop, right? I mean,
yeah, and they've got the weekend to argue over everything and whatever.
Okay, well, if that's the case, crude might stay under pressure. The question was, this dollar CAD, maybe it gives you an opportunity to trade it back up toward, especially if we get some good data today. Strong U.S. data, good durable goods orders. Unemployment claims stay, below 220. Continuing claims comes down a little bit. After looking a little scarier for the jobs data. Maybe the dollar Canadian trades back up towards 137.50, 138 with the weaker.
Yeah, that would look interesting. It would certainly put, particularly via dollar yen, it would put that rally, that dip to the test again, the original dip. So yeah, if we get a rally in the dollar, it's how it behaves. If we get up there, it doesn't look like coming back down again. Like we don't find rally sellers. Maybe we've turned a bit of a corner in the dollar bearishness we've seen of late against a lot of these pairs. So yeah, that's why you watch your levels and you see what your levels do.
Yeah, and so I was watching the trade-off show last night, not mine. I was watching yours because I was getting caught up on your show, and it looks like Michael Brown might have put a death nail in the coffin of the euro dollar. Just kidding.
No, that'd be typical. That'd be typical. I thought he was doing all right so far this week, but
no, I want to ask you, how do you feel about the euro up here at these levels? Jokes aside, and I love Michael Brown, by the way. I love his work. But what are you thinking about up here? As we're really having a difficult time at this horizontal resistance at the 618 retracement. What do you do with it?
It's done a lot of work, hasn't it? So, it's not going to carry on going one way forever. It's decided that this 109.60 area is where it's going to run into trouble. I would have liked to have seen 109 holding, but it dipped under there, so it just loosens up the downside a bit. But it gives us a bit of a range to play. Probably 108.80, as I said, 108.70. I've got an old zone down there, and up to those highs. So now we've got 70, 80, 90 pips to play with, and you take your cues from whichever way breaks first.
Sounds good. Kman, you have any thoughts on the dollar? We've gone so far over the course of the last couple of weeks. What are your thoughts about the dollar down at these levels?
Yeah,
you a buyer, you a seller?
Well, yesterday I bought dollars. I bought dollar Swiss. I sold euro dollar. Today I bought my euro dollar back because I think we may flip flop in a range a little bit. Still carrying the other one, but I kind of neutralize it with a bit of Aussie. So I'm very, very neutral right here and now. Going into a couple of things. Well, you've got Thanksgiving tomorrow. I don't know what's going to happen before if the market needs to manage more of the positions. We've got an equity market that remains very big. We've also got before the end of this month and perhaps in the next days or a lot of treasury expiries, rollovers, and things which could mess the picture up quite a bit. So I'm going to take things really as they come. Just one thing I want to, but we need to respect those levels as well. Then 109.60. Then I think it's already going to be important enough whether we close or below or under 109 in the euro dollar. And that cable is sterling was a bit running into the budget announcement, but it seems to start to lose a bit of steam as well. So that 125.5, 50, 60, call it, it's going to be an important watch on the cable. But also on the crosser side, it looks that sterling has found not the top, but at least a bit of resistance there. So I'm looking at those couple of things right now.
Yeah. All right. Well, thank you very much. And yeah, I mean, you look at the euro sterling. We got some support ahead. The 200-day moving average, some trend line support, wedge support. So I could see that. Sterling's taking a little bit of a backseat and to this move. So real quick with you guys, I want to talk about one other thing. We have Eurozone and UK PMIs tomorrow. Now, I'm going to be probably sleeping. Well, as I sleep during those normal hours anyway, and I'm probably going to sleep in a little bit because it's Thanksgiving and we're not cooking. We get to go to somebody else's house at my in-laws' house to eat, which is great because I don't have to clean up. But we're going to be getting some European data. Do you guys, first of all, you're going to be broadcasting the Flow show because obviously you guys aren't celebrating Thanksgiving, but are you going to be looking for anything in particular with those PMIs?
Yeah, for me it's going to be about confirmed weakness, and especially of the main countries like Spain, not Spain, sorry, Germany and France, seeing what they do, because the market globally expects those PMIs to tick up again. But if they don't, I think because I have trouble to see euro strong, maybe especially versus the crosses. I don't really know what's going to happen with the dollar over month end, but especially in the crosses, I'll be looking at a couple of crosses perhaps for the euro in case those PMIs disappoint again.
Got it. Brian, you have any expectations going into tomorrow, especially with UK PMIs? I mean, services data should be watched pretty carefully, I'm assuming.
Yeah, that was just hovering below the expansion line at 49.5. So keep an eye on that one. If the pound wants some good news, then that one going back into 50s will help. As for the rest, it's going to be a case of particularly for manufacturing, for the UK, for Europe, and all the others, it's going to be a case of does it get worse or does it get less worse? But I can't see anyone popping into that magic 50 number. Looking at the likes of France, who are sitting at 43.1 at the moment. Germany 41.2 in manufacturing. Even if it jumps to 45, it's still contraction. So it's just not as crap as it was the month before if they go up. But yeah. It's just it's a question of how bad things are or how not as bad things are.
Got it. Yeah. Okay. So, I mean, the 50 level is still obviously the magic expansion contraction number that I think that's going to be the magic number that the market's probably looking at. Couple last questions before we have weekly unemployment claims. I know you discussed this a little bit when you first came on with Dale. You guys were looking at gold, and gold is nudging itself right up against 2010, and I have to say gold looks really bullish. But I I made this comment yesterday with Chris Weston, doing the trade-off show. We had to do it a day early because of Thanksgiving. I have a hard time chasing gold higher with silver. Silver is right into, well, a couple big levels. First of all, silver is right into the 618 retracement, big triangle consolidation. It's not a little triangle. It's not like some little, 3-week consolidation. This is literally, all year we've been consolidating in this what I think is a symmetrical triangle in silver. So I have a very difficult time chasing gold higher without silver breaking higher. And so what do you guys think about this? I mean, it looks enticing with gold. It looks like, you should be long, but what do you think? Do we do it? Do we go?
I think if it breaks that 09-10 area, then it's going to run for a bit. Probably 20s. I think 15-20s at the least. The next stop. So if you want to buy it, you need to try the break, or wait for a decent dip. But then if it dips from here, you got to wonder, why is it dipping again? It is looking quite bullish. That's why I folded up my short, because I just don't like the look of the price action. But a level's a level until it's not, and it's still got to break. So until it breaks, it can go either way, really.
And Charles makes a good point. He said, maybe needs rates as a catalyst. And speaking of which, if you look at the 10-year and look at what's happening just in yields right now, the 10-year's peeking its head above the 618 retracement. Remember, this is previous support, and a lot of people will say, well, this is this would be a very, very bullish breakout here in the 10-year, and 30 years pushing as well. Maybe that is a catalyst that drives gold higher. Kman, you have any opinions here about gold?
On gold, we are in that zone, right? It's all to play for, 205 to 10, 12, and that's where we are, but it keeps pushing against it. What I don't really like is the behavior of, don't like for those long dollars. What I don't really like is the behavior of that US 10s. And I don't know exactly how those rollovers will impact everything, but if I look at how it's pushing, I've got the impression that there's perhaps a bit more to come before the end of the month or so on the bond market, and for that matter, yields perhaps a bit lower. So and if the yields break lower, or if the bond market goes higher, we know what usually happens to the metals, right?
Right. And maybe Charles is right. Maybe that's the catalyst that
and maybe that is the catalyst, right?
Yeah. It could be. Well, we're going to have data in about less than 2 minutes, so let's prepare for that. Dale, any last minute thoughts before this data comes out?
Yeah, I think it's important that people enjoy being with their loved ones tomorrow, and no matter what your P&L is going into Thanksgiving, consider yourself very fortunate that you can afford to do this, and be thankful that you have excess capital to assume risk with, and help those that don't.
Very, very, very nice Thanksgiving message to our listeners. And before the data comes out, I just want to say, Thanksgiving for us as Americans is a time for us to be thankful for what we have. And I appreciate all of you as listeners. A lot of you have been with us through the thick and thin, over the course of the last, how many years, Dale? 7, 8 years?
Yeah, thank you for growing older with us.
Yeah, exactly. Thank you, you youngsters. All right, hey, we got data coming out in just a few minutes. Thank you all for being part of this movement and being part of the family. And Kman, Brian, thanks for being here every day and getting us up to speed. We appreciate that.
Yeah.
Thank you,
So we got the
guys.
dollar index to the left, S&P right in the middle, yields over here to the right. Ryan, I'm sorry, I didn't mean to cut you off. Sorry. But
no worries. I'll just say no. Thank you very much. Anyway, data out. Worse than expected. Durable goods down 5.4%.
Dollar's firming up
jobless,
here.
Nothing. A bit better, but not that much. Whoa, what's happening?
209. Look at that. Continuing claims, little less. Yeah, dollar's liking that because I think dollar traders are getting a little scared, you know, and so now gold's coming down, yields are bouncing. False alarm, guys. Continue on, you know. So that's basically what it is with the data, at least this week's data. So we're seeing the dollar bid up a little bit. Anything jumping out at you, Ryan?
No, those durables a bit on the soft side, as said, but those jobless claims might make up for it. You guys go and enjoy your first practice Christmas.
Well, appreciate that. Kman, any final thoughts before we pass it over to Dale for the Thanksgiving holiday? And just as a reminder, we will not be broadcasting tomorrow at this time because of the Thanksgiving holiday. Dale will be not here on Friday, but I'll be here, and hopefully not just by myself. If Ryan and Kman will be here, I'll be happy to be joined by those two guys on Friday. So
if you bring some turkey leftovers and some pumpkin pie, we'll join you. If not, you're on your own.
You know exactly how you just want me to leave the beer. I'll leave the beer for you.
We just want some food. They never feed us here. They never feed us here, boys and girls. We're starving every day.
Yeah, Kman, any last minute thoughts before we hand it over to Dale? Unless he disappeared already. He may have disappeared.
Yeah, he's probably trading.
He might be trading. Yeah. So
no,
anyway.
Sorry. No, just wanted to say happy Thanksgiving to everybody. And if you don't know what to do right now, don't worry. The market will still be there on your return.
That's great
for sure.
Great point. Great point. All right, Dale, happy Thanksgiving to you. I hope you have a great time with your family. And I know you're going to be traveling a little bit to see everybody, and hope you have a great and wonderful time. Ryan, Kman, have a great day. And I'll see the rest of you on the daily roundup for ForexAnalytix traders. I'll see you there. Well, I'll see you on the morning edge actually in about 45 minutes. Dale, it's all yours, buddy.
All right. Happy Thanksgiving, team. Dream team.
Enjoy.
Glad you're feeling better, Ryan. Have a great weekend, Kman and Blake. I'll see everyone Monday, and I have Dr. John Sinclair. Sounds like prestigious guy, but John's a guy who hacks it out in the market just like us every day. John, how are you?
Good. Can you hear me okay, Dale?
Yeah, got you, buddy. So
awesome.
I like your charts. Nice,
thanks.
clean candles, and like the background. So
are
you doing
a little bit of a fish tank over here now?
Okay, so what you doing much the day before Thanksgiving?
Well, the big thing that we were tracking is to see if Nvidia did anything, right? So
right,
had the earnings came out yesterday, and really came into a real choppy pattern here today. Let me just go ahead and pull it up just so we can take a look and see what it's up to here pre-market, if I have even access to that anymore on this chart. So it's basically, last time I checked, it's opening pretty flat, but I'm not seeing any pre-market data right here, and I don't feel like messing around with it here on TradingView, but pretty flat, right? And kind of what we would expect here going into the holiday, I guess. But what's interesting about Nvidia is it tended to gap above its, or it tended not to gap for the longest time after earnings. And then basically after the last stock split, we really started to see some major stuff come out in terms of gapping, particularly with the emergence of the new generative AI programs that are out there, and Nvidia being one of the hardware systems and also incorporating software behind the scenes. So that's been pretty wild. But right now, choppy, sloppy.
Are you surprised? And is there any market tell that we didn't gap on this earnings report?
It was tough. I mean, it's always a guess, right? So, so one of the big things that maybe it was because of the holiday, they've been used to. What was interesting is Nvidia used to have earnings Thursdays after the close, and it used to be just a great setup. It was like almost like clockwork, a great setup for an iron condor, selling an iron condor, which is an option strategy that captures a premium if it doesn't move, right? If it stays within a certain range. And so you can almost bank on that every time. And then of course you have the high implied volatility, before the earnings report, and it was like clockwork. There's always that risk, of course, but Nvidia was just like, and then you can see here, things just really started to move. This is a quarterly chart here for Nvidia. You can see, I mean, look how just it's kind of floating along here, floating along, and then AI. So we've definitely been seeing a lot more volatility out of this name. And I was hoping for some action, just to give us something to do before the holiday. But you know what? It's the holiday. It's not a bad time to take a break, and I guess we can say thanks to Nvidia for that.
Okay, so calm. Certain other sectors have been popping up to life. You following the miners at all? Because we've had some nice moves in gold and silver.
A little bit, yeah, for sure. So let me just pull up the GLD. What's really interesting here is you can see the quarterly chart has been in a range, and the reason I'm pulling this up is because we're almost done really with the last quarter here of the year. So we've got one trading week left basically, and a couple, like a half day. So I've been looking at a lot of these quarterly charts, see how things are moving going into next quarter. We got a bullish engulfing candle right here, or since we're really not in a downtrend, I like to call it an engulfing bullish candle. That could be an interesting tell here in a lot of these metal type names, right? And then we've been seeing some interesting other moves in names like Oxy on the oil side of things, right? Looks like it might finish up with a red quarter, which is interesting. It's in a pretty tight range right here, so we'll see how that goes. We were actually predicting, you can see we were predicting a down move on this one based on the quarterly and seeing if we can get a harmonic up. But so far it's just kind of going sideways.
What is that? A Gartley? A butterfly? What is it?
This one is probably some sort of butterfly right here. So I'm not exactly sure which one I drew on this. I was just getting some estimates. We had an 886 retrace here.
Should be lower today with crude got hammered over the delay of the OPEC meeting.
Yeah.
Crude's down $3-4.
So definitely something to keep on the radar. There might be some trading action going in there today, but definitely looking to see how these quarters close. The big one, of course, right? The S&P 500. I've got. I'll show you the count in a little bit if you guys are interested. But a really interesting candlestick here. We had the first red quarter in a while, right? After 3 quarters, last quarter, and now it looks like we're going to finish this one green, right? So unless they could do something in the next week to push this thing down, but they shrugged off anything from the FOMC minutes yesterday, and all these data releases are like a day early because of the holiday. And even though J-Pow came out right last time and said basically we're not even thinking about lowering rates, market's like whatever, bullish. So we've got a green candle finishing up here. So we'll see how that closes.
What's your count?
Okay, yeah, so let's take a look. One of the things I also want to point out here, guys, on the monthly chart before I pull up a wave count on this one is look at this candlestick pattern. Although it's not a huge downtrend over the last 3 months, right, which made for the red quarter, right? Look what we got right here. This open and close there's a slight gap here, which means that this pattern is a morning star reversal pattern, right? So very close to it. I mean, even though we're not necessarily in a sharp downtrend, Morningstar reversal, and that has pretty high probabilities of continuation to the upside. So that's pretty interesting there. Again, we still have a week left. The monthly chart hasn't closed yet. You never know. We could have some sort of kind of doji or a little inverted hanging man type pattern. And so when we pull up the wave count on this one, I've got 2 wave counts on this, right? So I've got back from the Great Recession, I've got this trend line that is kind of moving up and intersects with the Corona crash, and of course the rally off of that. So the real question is, what's the count, right? So we have this 1, 2, 3, and there's 2 things that could be happening here, right? This whole thing could have been a wave 4, right? And we could continue to work our way up for a larger wave 5 up, and we're just part of a major uptrend right now. Or you can see I've got this A, B, C. And if it plays out symmetrically, it basically brings us back to this macro upper trend line here. And I think a lot of bears are hoping this happens, but it's really hard to argue with this green month and the green quarter. And I just want to show you here too, this channel is really pretty funky. If you go to the daily chart here, I pointed out an interesting bounce here recently where we stayed in the channel. And then now you can see lost the channel, and that was of this area right here as it came back and retested. You can see we had a couple red days right there. Yeah. That level was very important for the bears to press, right, to try to get that thing going. So now we're back in the channel right here, and which implies to me that the bullish trend still continues.
Okay, interesting. Yeah, no one's looking for that first count anymore, John.
I know.
I mean, very few.
Right.
Yeah, so maybe that's why it happens now, because there were a lot of people that were looking at an analog from 1987 right
Okay.
before it turned. You know, there was crash alerts out there all the time,
For
and
sure, for sure.
it was following it closely till the beginning of the month, the end of October. I mean, this kind of rally that we've had, I mean, I look at your chart, it's the biggest, fastest I've seen.
Oh yeah, yeah. I mean, we haven't played around with this type of, especially I mean, you can just kind of look at the chart right here. I've got a daily chart pulled up. I mean, just this 1, 2, 3, 4, 5, 6 candles in a row that were all green and basically continued to gap. We haven't seen that. Golly, I think it was like since like 2020. I mean, here was 4 in a row.
Oh, okay. Yeah.
Right, here's 4, but not 6. Here we go. Back here. This is back in 2020, but not as big a candle, right? I mean, so this was this was an angry rally right here.
Yeah. Probably a lot of people BK'd, a lot of CTAs were big shorts.
Oh yeah.
Dale Pinkert was short. Yeah.
And and like you said, I mean, you went all the way back to 1987 to, to try to find some comparables to this. How do you really, unless you just buy every dip, type personality, you're always going to look at this and kind of scratch your head and be like, yeah.
Yeah, and the way it bottomed, no reversal candle, nothing.
Yeah, no, not even even if you wanted a wave count on this thing, there's barely even like a 1, 2 in here, This is like, well, I guess you could call that a 2, 3, 4, 5. And then, what do we go back to the mid channel right here? Maybe. So we'll see. But the thing is that this market's just been brutal, even through the COVID deal, right? It's just been brutal for the bears, right? Everybody expects those crashes anymore, but I think it's a testament to like how quickly the market can shrug off just about anything anymore, right? So it leads you to wonder is like, what would be the next big thing, right? So to kind of get things going. But even here, if you remember when we have like 4 days and then it's like face ripper rallies on this whole ride down, so, and then the rest was just like, see ya.
How about the banks?
Yeah, so that's huge, right? So that's definitely one that we track, and it's smart that you brought that up too.
I'm pretty smart.
Well, I mean, just because it's important, right? As go the banks, right? So go the market. And so these are definitely ones you want to look at the semiconductors, right? So of course you got Nvidia and all that crazy. I mean, Intel was crazy the other day. But right now, we got some major levels. I don't have a volume profile on here, but we're tracking it. There's a lot of volume, and you can just tell from the chart even without looking at the volume. You can see here, look, resistance. Okay, well, that level right there of resistance again, and then it blew through it. And then support, right? So it's holding this level. So this corresponds with a volume level 2, and it makes sense because we consolidate and there's volume traded in these little consolidations, right? So this is a huge level for the XLF to hold, which represents a lot of the bigger banks. And so if that drops, we got, the bears could have their day. Because we got some nice gaps, right? We got a nice open gap right here, open gap here. We got some levels here that are really interesting. So this was big, but remember, this all started, right, with a couple of these big down moves started with the worry of the Silicon Valley banks, right?
Yeah,
and everybody's like, banks don't fail in threes, and apparently this time they do. So. So we'll see, right? We'll see how this holds. What we do know is that it's getting pretty tight, right? So, if you see any sort of strong volume to break down through this convergence right here, that could be a pretty decent tell to at least say that, hey, some of these levels might get tested. Now, if there's any sort of contagion that causes that could, spread a little bit into the wider market. We'll just have to keep an eye out for it.
Are you in the camp that the bond market has turned? You have a view on TLT?
I honestly, I don't really mess around with it too much, but it has a pretty decent rally here so far. To really be convinced, right, we'd want to see a break of any of these trend lines, right? So
Oh,
we're
that's
getting
way up
close.
there.
It's coming up and
Okay.
testing it. So a nice little push through here. Just to throw up a fun wave count right here. A nice little push through here. A retrace, test it again for a wave 2, and then boom, wave 3 finds resistance there, wave 4, and then we see if it can break out.
Okay, interesting. Anything else on the table you want to talk about?
Guys, just just kind of keep an eye on the IWM has been really interesting recently. It's been it's been one of the only sectors that hasn't shown or that has been divergent from some of the broader markets. And when we say the broader markets, we're actually looking at, and we talk about this in our group a lot. Really, what is the S&P 500? It's basically Microsoft, Apple, right? So all the big names. What is the Nasdaq? It's Microsoft, Apple, all these names that have been like pushing. If you just look at Mr. Softy here, it's just been, look at that, just plowing, look, fresh all-time highs. This thing's been a monster, right? And so again, AI. So when's that train going to end? We'll see. But the IWM has been, hasn't been as strong. If you look at the weekly charts,
Oh, it's been terrible.
yeah, and you've got some pretty even weighting on these with the different companies. And so, you had Lowe's report yesterday. They're starting to get a little bit concerned about discretionary spending. You've got the whole, students actually having to pay their student loans back now. So, money being diverted in that direction. So, we'll see. We'll see how these smaller caps move. With a couple of these dynamics that are in play. Now, like we said, 2 weeks ago, the IWM was red and everything else was green. But again, it played catch up. So, but keep an eye on that. That's there might be some moves there, right? As if everything else is green in IWM, is IWM going to catch up, or is it kind of giving us some indication that that things might be a little weaker under the hood?
Okay, John. Well, John, what would be the best place for people to follow your work, get involved with you?
Oh yeah, well, you guys, if you want, you can follow me on X.
Yeah, I know. I'm still adjusting to that too.
So
at Dr. Trade with Dr. John.
Trade with Dr. John, and I've got tradewithdrjohn.com. You can find me on YouTube. My handle is Trade with Dr. John. So you can come meet me there, and just see a couple of the ideas that we have out there. So we're always researching and always analyzing. So and trading in between.
Okay, well, Dr. John Sinclair, have a great Thanksgiving to you and all the traders you work with. Hope it's a very nice holiday for you and you finish the year strong.
Thanks, Dale. I appreciate you as always. Have a wonderful Thanksgiving, and thanks to everybody for listening to some of our ideas.
And I'll talk to you next year, John.
Okay, take care, Dale. Thanks again.
All right, Dr. John Sinclair, follow him at Trade with Dr. John. And that's a wrap. Thanks again, my trading warrior brother. Everyone have a nice holiday, and don't just count your pips, count your blessings. And I'll see you Monday. Adios. Thank you, everyone. Thank you, Ingmar, Joe. Bye-bye. Miriam, you're welcome. See you, Patrick.